Hi, folks. Dan Bird here with the Daily Scan. And this is for BreakpointTrading.net. Today is Tuesday, November 12th, and it's the day before the CPI, the inflation number. We're going to talk about that tonight. So this should be a pretty quick one because I don't have any scans for today. Nothing really came through, and I probably don't want to add anything right now anyway, because we've got options expiration coming this Friday. I talked about that in yesterday's video. And we have CPI tomorrow, which I'm going to talk about tonight. So let's jump into that real quick. First, I'll show you what the market looks like. And on our market bias chart, it actually went down a little bit more today. So a little bit more bearish. Still is hanging in there, though, but just turned a little bit more bearish. We'll see what the market does after the CPI tomorrow. And I think that's what everybody's waiting for right now at this point. Let's take a look at the S&P. And you can see it rolled over a little bit, started to come down, actually pulled back to the midway point by the middle of the day. So it opened kind of high and then pulled back. So not too bad. Although let me show you something on all of these charts, and that's the Keltner channel. So I'll explain what this means. The Keltner channel is essentially uses the average true range, or the ATR, the average true range that a stock or security will trade in during a particular period. We're looking at a daily chart, so it's the amount that it trades in a single day. And what the Keltner channels do is it puts channels based on the upper and lower boundaries of that average true range. So the green area here that you see is one average true range. The blue area is two, so 2 times the average range that it travels in. And the red area is 3 times the average range. Now, it rarely gets to the red area, and it certainly rarely ever gets above or below it into 4 times the average range. But look where it is right now. Let me turn on my cursor so you can see this. Look where it was yesterday, in fact. And Friday, it hit the 3X, right at the upper edge of the 3X. Yesterday, it hit it again, and today it's pulling back. So that's typically what happens when the market gets overextended. You can see, but it can stay overextended for a while, but you can see back here, got overextended, it pulled back a little bit right there once it hit that 3X, but then went right back up to it and then started back down. So back here in July is when we had that little mini correction. It went down. What it likes to do is go back to the mean, so reversion to the mean, which is the blue line, 21-day moving average right here. So that's what it did here. It went through it, went all the way to the bottom, again to the 3X ATR, and or the 3X Keltner channel. And when it got there, that is an extreme oversold area. So it came right back to the mean and went through it again. Right here, it went back to the mean and then reversed. Right here, it went back and just barely touched it. Went through it a little bit right here and reversed and went back up. So that's what I think is happening. I think it will probably try to get back to the mean again. Right now, that's at 58.50 roughly, but this is rising. So somewhere around 58.75 to 5900, somewhere in that area, I think the market probably will get to. If we look at the NASDAQ, same kind of thing. NASDAQ looks like a similar candle. It pulled back from the top again. You can see how it's sort of curling over. If we look at the Keltner channel for the NASDAQ, same thing. Didn't quite hit the 3X, the outer band of the 3X, but got pretty close there. Now, if this comes through the 5-day, that will be a signal that it probably is definitely reversion to the mean coming back down here. And in this case, it's at about 20,500 right now. We're at 21,070. So about 500 points. That's actually not out of the question. That will be actually a healthy pullback if that happened. But that's why I like to look at the Keltner channels, because it tells you when the trend is starting to change. There are other things that tell you as well. But that's a pretty good one. All right. So that's the market. Let's take a look at CPI real quick because that's coming tomorrow morning at 8:30. It probably will have an effect on what the market does tomorrow. So down here, this is on the charts page of my website. By the way, there's charts right there. And on the left-hand side, we have economic charts, sentiment charts, oscillators, analysis, trend analysis, etc. And under economic charts, we have the CPI. So CPI headline is right there. And the way CPI works is it works on a 12-month rolling window called the base effect. So as a new one gets added on the front end over here, one will drop off on this side over here. So if a really big one drops off, like it did in September, and a smaller one gets added on the top end, then it looks like CPI is going down. And CPI has been going down pretty significantly. So you can see last month, it wasn't quite as big as September. September actually went from 2.9 to 2.4. So it was a big drop. The next month, it was also a big one, not quite as big, but also a big one. And it went from 2.5 to 2.4. So look what's happening tomorrow. Very, very small one. So when a very small one drops off in that 12-month base effect, then, and it depends on how big this one is that gets added, but most likely CPI is going to go up. Worst case, it'll probably be flat. I think they were calling for it to go to 2.5, so going back up to the September number. That's what I think will happen as well, that it will go from 2.4 to 2.5. And everyone tomorrow will be talking about inflation coming back and maybe the Fed cut too soon and everything else, but it's not. The one next month is a small one, but not as small as the one tomorrow. So we probably will get flat CPI again for the second month. And the market will probably say, yep, see, we told you inflation's coming back. But then look what happens from February to May. These four right here, huge ones dropping off. I expect that by April timeframe, going into the summer, CPI is going to be below 2, and it could be getting close to 1.5. So people might start talking about deflation when we get here. But first, we got to get through this. So, I mean, this is not a big surprise. The Fed knows this, and most traders should know this. So they shouldn't be screaming that inflation is coming back. But those that don't understand how it works probably will scream that. All right, the other thing I like to look at is commodities, because that has an impact on the inflation. Here's the commodities right here. So this blue shaded area is the month that will be reported. So we're in November, so the month will be the month of October. DBC, these are all of these commodities right here. So it's a combination of crude oil, gasoline, natural gas, gold, silver, soybean. It's food, metals, and oil and gas. You can see right now, it's actually, look at the dot down here rather than the moving average lines. The dot is way down here. So that one is dropping off a cliff, basically. But we don't necessarily want to look at what it is right now. We want to look what happened in October. And what we see in October is that it started pretty high in the beginning, but then it dropped pretty well through the month. So this is going to actually help CPI. If this was not the case, and you can see down here, DBA is all of these. This is mostly food commodities. And the CRB, which is this blue one right here, CRB are agriculture, energy, and metals. So DBA is elevated, but it came down as well in October. CRB came down dramatically. Look at how much they went up the month before, and CPI still dropped. That's because that big one dropped off. But remember, it only dropped by 0.1% last month, and this is the reason. It would have dropped by much more if it hadn't been for the commodities going up so much. October commodities dropped. Copper went down. Oil and gas, really important ones, they went down as well in October. So because of that, I think it will mitigate the effect of the 12-month moving average, which still will probably tick it up slightly. At worst case, it'll be flat. It'll come in at 2.4, but I think it might come in at 2.5. So keep an eye on that tomorrow. We'll see how the market reacts. If everyone is screaming about it, the market may not like it. Its market is going into a rough period right now anyway. This is the weak period in November, even though we're in the strongest period of the year. From now until next Tuesday, the 19th, is the weakest period. And we have options expiration expiring. We've got max pain we have to deal with. And we have inflation looking like it's coming back up. So all of those things, the market has roared higher and is just sitting there patiently waiting. It would be healthy for it to actually pull back, and that's what I'm expecting it to do. So we'll continue to watch it. All right, so let me go back to my website. I want to make sure I cover the disclaimer that I am not a financial planner. I cannot give you advice. I can't suggest what to buy, what to sell, when to buy, or when to sell. It's all up to you. You have to understand your own trading style and risk profile. If you do decide to engage with a financial advisor, I recommend that you go to this website, investor.gov, and confirm that they are accredited and in good stead with that. All right, so let's take a look before I look at the daily scan. I want to cover a couple of requests from the audience. One is Jeannie. So this person asked me about it a little while ago. They just reported, so you can see what they've done. Looks like a great report. They'd already started moving up. Right back here would have been the buy point, right when it closed. See, it was pulling back, so it hit some highs back here, hit a high, started pulling back, and then went above the 21 day. So that would have been the buy point right there if this was one that you were watching. But it looks really good. I wouldn't chase it here. I would actually wait for it to come back to, especially this week, I wouldn't chase it. So right here is where support is. So that's at about 8.5. It's got a big gap right here as well. So it could come back down here to 8, a little above 8, where that bottom of that support is. I'll tell you exactly where it is. The close on this day was 808. So it could come back to 8, 850, somewhere in that range. If it does, this looks like a very strong chart. Let's see how it's doing versus its peers. It's outperforming its peers as well. And the accumulation distribution line is starting to perk up. So, and it just went above 0 up here on the MACD. So all of those things say that, and it's above the cloud. So a lot of reasons, and huge volume today as well. So a lot of reasons why this probably will continue to go higher. The only thing that might keep it back is the rest of the market. And if it does, it may pull back to about 850, somewhere in that area. I think that might be a good place to buy if it does. Doesn't have to, of course. It could just keep on going higher. All right, the other one is gold. And let me take a look again at the market bias matrix, because gold is on this matrix. It's down here under the metals. And you can see gold and gold miners both have bearish signals. They just gave these recently. Gold miners just went bearish today. And silver miners are also bearish, probably close to going bearish on the medium term. So this is the short term on the left, medium term, and long term on the right-hand side. So gold is right here on the chart. And you can see right there is the short-term signal. The medium-term signal won't be until the 21 gets down here. So it would have to fall still quite a bit for it to get a medium signal. But look at the gaps that it's going through. It's gapping down significantly. So not a good look for gold right now. I mean, gold had a huge run, so it's time for it to pull back. This might be a healthy pullback, although it's below its 50-day moving average, which you never like to see. I also like to see what it's looking like with the cloud, and it's below the 50-day and it's in the cloud. So it's not below the cloud, but it's in it, whenever a stock goes in the cloud, this is a Japanese indicator. Um, when I was when I met with David Keller from he was with Stock Charts. He's got his own company now called Market Misbehavior. Look him up on YouTube. He's got some really good videos on YouTube. Market Misbehavior, David Keller. He said he used to trade in. He's traded with some really big trading companies like Fidelity, et cetera. And he said when he would go to Japan, these are Japanese candles right here. Japanese traders use only candles and only the cloud. That's all they use for trading. So for me, this is a support resistance area, not a line, but an area. And if you look at all the things that are happening with gold, the PPO line, which is also a MACD, is is below zero up here. What that means is this is basically just mapping two moving averages. And when the black line goes below the zero line, that's really the thing to watch for. That is confirming a downtrend. That means the two lines are neutral. So it's no longer in an uptrend. Right now it's at a neutral point, but it's accelerating below it. So it's going into a downtrend. The histogram, the blue area right here below it, it just gives you the magnitude of the move. So you can see as this move was going up, you see the line stayed above zero, even though they crossed. That's okay if it's above zero. And the magnitude wasn't real great with the histogram because it was just a nice leisurely move higher. Kept coming back to the 21-day, remember, reversion to the mean like I talked about. And then it would just move up. But right now, take a look at the histogram. Histogram is significantly higher. Now, sometimes you can pay attention to these and just watch where it's switching from above to below zero, but you can't do it all by itself. As I've always said over and over again, never use just one indicator. Look at everything else to see what's going on. So the lines crossed right here. The short-term signal was given right here. It hit the cloud right there. And if we look at the longer-term MACD, which is this gray and green one down here, this is nothing more than the green is a long-term moving average, convergence, divergence. It's a 50-day. And the gray one, or the black line, is a shorter term moving average, also a MACD. They're both MACDs. One is faster than the other. That's all you really need to know. So when the fast one crosses over the slow one, then a trend change is occurring. And you can see that happened right there. This happened first, the lines crossed, but that's happened before. So that by itself is not a big concern other than it is a warning. And then the histogram went below zero. Again, not a big concern. Everything's still above the moving averages, but it's a warning. And then this went below right here before this line went below zero. So that was your second warning. So it's the analogy that I said yesterday or Sunday is it's like, a quarterback looking for his receivers. He looks across the field and does a checks off receiver one, receiver two, receiver three. Okay, they're all covered. So that means this is definitely in a downtrend. And we got this one doesn't have the 5-day like this, but we got the short-term moving average right there. So all of these things are now lining up. That gold, I mean, they're giving you early warning signals way back here. The gold is definitely falling and will probably continue down. How far will it go? I don't know. I have no idea. But the volume on the down days has been huge. So it looks like Wall Street wants to distribute out of gold. The accumulation distribution line is starting to move down. But that doesn't mean it will continue. It means at some point it's going to stop and start to move back up again. But you just have to watch all of these to see when that happens. The question that this person asked was, well, when will it stop? When will it be okay to buy the dip? And I said, well, when it stops dipping. And how do you know that? Well, the first thing, I think the number one thing is just look for one of these bars to turn green. For this to turn green, that means both trend and momentum are both moving higher. So if it's blue, that's just neutral. So you can see it, these are green, it turned to blue, neutral, and then it turned red. Down here we had a red one, and then we had a green one. So that's the thing to look for. Right now we've got a bunch of red ones. So this will probably be red if it keeps going down. If it slows down, it'll turn blue. Doesn't mean it's ready to go back up yet, just means it's in a neutral mode. And then when one of these turns green, then that's your signal to start looking for a good entry. So that's it for gold. Hope that answers those two questions. If anybody has questions like that, just put them in the chat. I will try to answer them if I can. Also, please like and subscribe to the channel so that we can get more visibility and get more people participating. That would be great. So let's look at the daily scan now. We'll go through each of these. This is the one we added yesterday. We have not added any more, and we will not add any today. I'm going to actually, let's see. I'm going to open up the status, and we'll see where we are today. Let's see. See what the status of these are. I haven't actually looked at it after the close today. If I go back up to here, we'll take a look at DocuSign first as this is opening up. Okay, so here we go. There's the status of what we had in the account right now. As you can see, only one of them is negative so far. That's the one that we just added. That's kind of to be expected. This one here, this is Raytheon. We just added that one, was the most recent one before WLDN. It was vacillating back and forth between positive and negative. It ended positive for the day. You can see today's net gain, 3 of them were negative. So even though we didn't overall go negative, 3 of them actually went down today. So, but overall, not too bad. Still fairly positive. So let's now take a look at DocuSign. And where is DocuSign? Okay. Here's DocuSign. There's what it looks like. Continues to move higher. So this is the day we bought it. This is where we moved our stop. The 21-day moving average is right at where the stop is. That's what I was hoping for. It's continuing to go up. So we will not move the stop any further. We'll wait for the 21 to get higher. And actually, we'd like to see this pull back some and then start to move up a little bit more. So that one looks pretty good. Next is Google. Google moved up a little bit today. Again, we won't move the stop. We'll leave it where it is. Here's Oracle. Oracle kind of went sideways, but still looks okay. Powell, this is our big winner. The vertical green line is where it hit the scan. I explained all the scans and everything in the very first video that I did, so you can go back and look at that. But Powell pulled back too, but it's had an incredible run from about 250 to 350 in about a little more than a week. So it's to be expected for this to pull back, and really it's just in a sideways consolidation right now. And again, you can see the 21-day is catching up with the stop. So that's what I like to see. So we'll see how that goes. Now, the next week is going to be dicey. So we'll see how these do. There's Raytheon. You can see it definitely gave back some today. Did it on lower volume. So that's good. So we'll keep an eye on that one, see where it goes. This one also going sideways, Sentinel, just moving sideways after we got in and it moved up a little bit. So that looks okay. Vertiv is pulling back as well. Had a down day today, but again, still staying up there. So all of the momentum indicators are rolling over. So that's not a good sign, but it's to be expected if it does pull back. Again, the 21-day is now caught up to the stop. So it's a good place for it. Here's the last one. Right here, this is the only one that was negative, and you can see the day we bought it yesterday when it went above the 21, and today pull back with a shooting star candle, which is a trend reversal bearish candle in general. Doesn't mean that it will go down. It needs confirmation. But if it is confirmed and it does start to go down as a result of that, then you can see where our stop is right now. Stop, actually, I moved up a little bit to 44, was at 43. So here's what it looks like. So that one would be a 4% loss. We've got nice gains up here. I actually put in down here for the trades that the watch list trades that we didn't actually execute on, put it where the stops would be. And one of these would have been stopped out. I'll look at that Zeta. But you can see what the percentage is. If these were up here, which of course I wish they were, the reason they're not is they were so close to earnings. So hopefully we'll start to find some like this with earnings further out. Maybe these are some up here. But Affirm still looks great. Affirm is up there. Zeta just reported, and Zeta had bad report, dropped all the way through. This would have been stopped out. So the stop would have been at 32.50, which would have been right at the top of this resistance. That's where the stop would have been at 32.50. So that would have been stopped out pretty much at the open today. So that's why I put it here, but it would have been a 14% gain still. And then Upstart, which had a huge run, it was up 46% on Friday, but you can see it's given back almost all of that now. So we'll have to see how that does. We'll continue to watch it. We're not in it. So unfortunately, wish we were, probably would have moved the stop way up on that one because it had such a huge run up there. But right now, the stop is sitting at 55. So that's a 10% gain on that one. This is just a watch list. So 55 is right at the bottom of this big candle. So today the low was 65.15. I'm sorry, 55 is at the top of or the bottom of the gap down here, right with the 21 day. 21 is at 56. So it's right below the 21. So that's where the stop would have been. And we'd still be in it basically at that level. So that's it for today. Thanks for watching. Let me know what you think. Please like and subscribe to the channel. Give me any thoughts about what you'd like to see. I love the participation. I try to answer questions whenever I can. And we'll do it again on tomorrow after the CPI. We'll see what actually happens. Thanks, everyone. Good luck trading.